Right, now start our session. Now we are discussing about banking system and history of banking in Sri Lanka. Under this, so we have already discussed about definition of a bank. So how banks differ from financial institutions, types of banks and types of commercial bank and function of banks. Now we look at uh, history of banking. Yes, now we'll discuss about history of banking and the modern development in banking system in Sri Lanka. Let us start from history of banking in global phenomena. The history of banking began with the first prototype banks which were in the merchants of the world, right? Uh, the who made grind loan to farmers and traders who carried goods between cities. When we consider about ancient world history, 2000 BC, right? So in the ancient period, there is no such a financial institution called bank. Anyhow, there was some tradition that this kind of arrangement, there were some arrangement to provide a loan for the farmers, especially for the grain farmers, grain, right? So in our country we are having the paddy is a major agriculture. Likewise, in the ancient, it's been Babylonia and Mesopotamia, Sumerian, right, India. So in that area, so there was a system tradition to provide a loan to the farmers as well as provide loan to the traders who carries goods to one place to another place, cities, traders. Right? And so this was around 2000 BC in Assyria, India, and Sumeria. So Assyria mean today Syria, and it's an empire, right? Assyrian Empire, and it includes northern part of Iraq and southern part of Kazakhstan, like that, right? And India and Sumeria, it's Babylon, right? So in that 2000 BC, it's been around 4000 years ago, the bank system was introduced. Later, in ancient Greece, Greek, ancient Greece, and during the Roman Empire, lenders based in temple made loans. During the period of Greece, Roman Empire, temples, church act as a loan provider. The temple made loan while accepting deposit, right, and performing change of money, right? So the temple accept deposit also from the public, valuable item deposit, not in the form of money, rather jewels and gold coin, silver, like that. In that period, there were no notes, currency notes. So rather than uh, they keep gold coins. So temple has act as a loan. Temple made loans and accept deposits. Archaeology from this period and in ancient China and India also shows evidence of money lending. Not only in that empire, Roman Empire, Greece, in China and India also this kind of tradition was implemented. Many histories position in the crucial historical development of banking system to medieval and Renaissance Italy. You know, so it's kind of revolution, medieval periods during the period of uh, industrial revolution, right? Industrial revolution period. So it's the banking revolutionary period was initiated in Italy, right? And particularly the affluent cities of Florence, Venice, and Genoa. So these cities are in Italy, right? So the banking revolution has occurred in Italy. The Bardi and Pruzzi families dominated banking in 14th century in Florence, establishing branches in many other parts of Europe. Now, Italy, they formally form banks. They form official banks in the cities of Italy, like Florence, Venice, and Genoa. And the families, right? Bardi and Rossi families dominated banking in 14th century in Italy, right? So they have established some branches across Europe. The most famous Italian bank was Medici Bank, established by Giovanni Medici in 1397, almost 700 years, right? 700 years. Italian bank is the old bank. The oldest bank still existent in Banca Monte di Paschi di Siena, headquarters in Xenia, Italy, which has been operating continuously since 1472. The oldest bank. It's also uh, formed, established in Italy. So development of banking spread from northern Italy throughout the Holy Roman Empire. And in the 15th and 16th century to Northern Empire. So the banking system is spread from Italy from 30th century. So this was followed by a number of important innovations that took place in Amsterdam. Amsterdam is the capital city of Netherlands, right? Dutch, Netherlands. This was followed by a number of important innovations that took place in Amsterdam, Netherlands, during the Dutch Republic in the 14th century, and it's moved to London in the 18th century, right? So from this scenario, we can understand in the modern banking system is innovated, established in Italy. From Italy, then Amsterdam started to establish banks and followed by London. Now we'll discuss about the 17th and 19th centuries, the emergence of modern banking. By the end of 16th century and during the 17th century, the traditional banking function of accepting deposits. So formally, the banks are accepting deposit from public, accepting deposits. Money lending, provide loans, right? Money lending, money changing, and transferring fund were combined with the issuance of bank debt that served as a substitute for gold and silver coin, right? So bank, so it's mean public, the people deposit their gold, deposit silver coins, gold coin, to the bank. For that, bank will issue them a note, a promissory note. Whoever keep that note, those people eligible to withdraw the gold or silvers from the bank, right? So modern banking practice, including fractional reserve banking. Fractional reserve mean a certain amount of money each bank should keep in the central bank, or they have to keep in cash as a reserve to meet the obligations. So modern banking practice, including functional reserve banking, functional reserve banking, and issue of banknotes emerged in the 17th century. And reserve banks like central bank, right? Central banks also emerged, and bank notes like check, and it's like a promissory notes. So it's a document. Whoever keep the document, who is eligible, who are the owners of that properties mentioned in here, not the document. At the time, wealthy merchants were rich people, rich businessmen. At the time, wealthy merchant began to store their gold with Goldsmith of London, right? So that institution called Goldsmith, right? Goldsmith of London, right? They they accept gold, right? They accept gold from the public, from especially rich people, wealthy merchants. The Goldsmith of London accept gold coins, gold, who possessed a private wallet and charged a fee for their savings, right? The goldsmith uh, accepting deposits and keeping their valuable items. For that, the Goldsmith of London charge a fee, safeguarding charge, service charge, right? The merchant, the wealthy merchants, they have lot of gold, so they face difficulties to uh, safeguard. They want a place to safely keep their loan, keep their gold. So therefore, uh, the wealthy merchants put their gold, hand over their gold to the goldsmith, and goldsmith keep the gold and keep the gold very in safe manner, and for that the goldsmith charge a fees from the customers. In exchange for each deposit of precious metal, Goldsmith, Goldsmith issued a receipt certifying the quantity and purity of metal they held as bailee. It's been trust. So these receipts could not be assigned. Only the origin of depositor could collect their stored goods. So it's we can compare this practice with uh, pawning, right? In the bank, the pawning center, what they do. So normally people who need money, they give their gold to the bank, pawning center, and getting money. For that, the bank or the pawning center will issue a kind of document, receipt. In that receipt, you can find the value of money they lent and the value, the weight of the gold, the item of the description of the item. So likewise, in the goldsmith accept gold not for a loan, for the purpose of safeguarding. Goldsmith is a center, it's providing safeguarding center. They accept gold from the people, and for that they will issue a receipt. In the receipt, you can find the description about the item they have given, right? The receipt is a valid document. Whoever not the origin depositor could collect the stored goods. So this document is not negotiable, it is not transferable, right? So for example, if the receipt issued to Mr. X, to claim the deposits, Mr. X is the only the person, not other person cannot claim origin, right? If Mr. M deposit, Mr. M is the owner who can, Mr. M only can collect the gold from Goldsmith of London. Gradually, right? Gradually, Goldsmith began to lend money out on behalf of depositor. Right? Now the goldsmith have enough wealth. Then the goldsmith started to provide loan based on their deposits. Based on their deposits. So gradually, Goldsmith began to lend money out on behalf of depositor, which led to the development of modern banking practice. Promissory note, which evolved into banknotes like check, were issued for money deposited as a loan to Goldsmith. Right? So when the people deposit gold with Goldsmith, the goldsmith will issue a certificate, a document, so that can be treated as the depositor give loan to the goldsmith. Likewise, the goldsmith also give a gold or some valuable things, promissory notes to the loan for the borrower, right? And from that they will earn some sort of interest. So these practices created a new kind of money that was actually debt, right? Now the goldsmith started to provide loan, provided loan. The practice created a new kind of money that was actually debt, that is goldsmith debt, rather than silver or gold coin. A commodity that had been regulated and controlled by the monarchy, right? The royal or the kingdom need to control, monitor, supervise their goldsmith activities. So goldsmith is still the term bank is not yet established, right? And officially they are accepting deposits in the form of gold and silver valuable items, and for that, like passbook, they are issuing some receipts. And another side, the gold can be used to make money by providing loan to the borrowers. This development required the acceptance in the trade. This development required the acceptance trade of the goldsmith promissory notes payable on demand. Fractional reserve normally served this purpose, right? So therefore they need some amount of reserves, so they cannot utilize all the deposit to provide loan, so they have to keep some amount of gold with their hand. Acceptance also required that the holders of debt be able to legally to enforce an unconditional right to payment. It required that the note as well as the draft negotiable instrument, right? So now it's become flexible, right? So they deposit gold. So for example, I'm a wealthy uh, merchant. I have excess gold. I deposit the excess gold to the goldsmith. For that, goldsmith will give me a receipt. Will give me a receipt. So like a check, like a check. Then I can use that check to make trading. Right? Whoever keep that note, the document of goldsmith, can or eligible to withdraw the gold from the banks like a check, right? It's a check. So the concept of negotiability had emerged in fits and started in the European money market. So that document so become a tradable instrument, negotiable instrument, tradable, can be exchanged. But it was well developed by 17th century. Nevertheless, an act of parliament was required in the early 18th century, 1804, to overrule court decision holding that the goldsmith notes, despite the custom of merchants, were not negotiable. Right? So now it's like a check. Now we discuss about the modern bank. The first bank to begin in the permanent issue of bank notes was the Bank of England in 1695. Initially handwritten and issued on deposit as loan or as a loan, right? So they promise to pay the bearer the value of the note on demand. So it's like what? So people deposit money in the bank account. For that, the bank will issue a receipt. This receipt is in the early period in handwritten, right? It's written by hand, handwritten, and issued to the depositor. Say I deposit money, I deposit gold, and I will get some sort of notes, receipts. So that receipt can be exchangeable, negotiable. Whoever bears that promissory notes, that notes who are eligible to withdraw the money. Money means gold. So the first bank to begin the permanent issue of banknote was the Bank of England in 1695, initially handwritten and issued on deposit or as a loan. They promised to pay the bearer the value of the note on demand. By 1745, standardized printed note ranging from 20 to 1,000 were being printed. Fully printed notes that didn't require the name of the payee and the cashier's signature first appeared in 1855. Right? Fully printed like a check, right? A check. Printed note that didn't require the name of the payee. So it can be, so in the document there's no name, so it's easy, whoever keep that not who are eligible to get of payee, and the cashier's signature first appeared in 1855. It's like a note, our check, a modern check. Development of central banking. The Bank of Amsterdam from Netherlands, capital city of Netherlands, right? The Bank of Amsterdam becoming a model for the functioning of a bank in the capacity of monetary and started the development of central bank. So first central bank is what? The Bank of Amsterdam. An early central bank was the Swedish Riksbank, right? Swedish Riksbank, the Central Bank of Sweden. Central Bank of Sweden. This is the oldest central bank, Swedish bank, right? Sweden, established in 1668. Mutual Saving Bank. Mutual Saving. Now it's like NSB, National Saving Banks. Like, so what's the history of that? Mutual savings. Mutual saving banks also emerged at the time as financial institutions chartered by government without capital stock and owned by its member who subscribe to a common fund. You know, like Samurti Bank, what they do? They put saving, the community. the people in that area make savings every month. They are save a small amount of money from the income. Whoever needs money loan, they can from the community, if anybody need money loan, so they can go to the saving bank and they can get. So that's a mechanism, right? The mutual saving bank also emerged at that time as financial institutions started by government without capital stock and owned by its members who subscribe to a common fund. The institution most frequently identified as the first modern saving bank. First modern saving bank as the saving and friendly society. Savings and friendly society. So it's wanted to appreciate the saving among the society, and they want to establish a friendly, right, friendly society organized by the Reverend Henry Duncan in 1810 in Rushwell, right, in Rushwell, Scotland. Rev. Duncan established the small bank in order to encourage his working class congregation to develop thrift. Now we'll discuss about uh, banking industry in Sri Lanka. Right, evolution of banking industry in Sri Lanka. So Sri Lanka, then known as Ceylon, was under the reign of the Sinhalese king, and even the Portuguese and Dutch banks and banking were still alien to the Sri Lankan culture, right? So we had our own banking system in Sri Lanka, right? So it was persist not only in Sinhalese kings but also during the period of Portuguese and Dutch. It was only during the British colony that banking was introduced in Sri Lanka, with mainly branches of foreign banks being set up. So English people come to Sri Lanka, and they have destroyed our traditional banking system, and they have introduced their banking system. It's like a foreign bank setups, branches of foreign banks. The Central Bank of Sri Lanka was established in 1950 under the Monetary and Law Act number 58 of 1949, which was a major milestone in Sri Lankan economic history. Today, the Central Bank is the governing body of commercial banks. At present, Sri Lanka has a fairly well diversified banking system, right? Our country now a well diversified banking system today, which includes the Central Bank of Sri Lanka, two large state-owned commercial banks like Bank of Ceylon and People's Bank, 11 private banks, two housing banks, and three licensed specialized banks, right? Among this, the Citibank is the only US bank operating in Sri Lanka, right? Citibank is the US bank, right? When you see the evolution of banking system in Sri Lanka, we can find large banks like a Bank of Ceylon, People's Bank, NSB, Commercial Bank, International Bank, Sambat Bank, HSBC Hong Kong, and Shanghai Banking Corporation, and Senar Bank PLC, DFCC Bank. Now we take a People's Bank as the case, and we discuss how the People's Bank evolved over the time. So we are focused today now, or focusing on a People's Bank, right? Based on this case, we will understand the development of other banks. People's Bank was established on 1st of July 1961 under the People's Bank Act number 29 of 1961 as a state-owned commercial bank in Sri Lanka. The first bank in Sri Lanka is Bank of Stone. Later on, in 1961, the People's Bank was established. The first branch was opened at Duke Street, Colombo. During the year, 7 more branches were opened at Planaruva, Hinguragoda, Hammantota, Anuradhapura, Puchalam, Martle, and Kandy, as well as a foreign branch in Colombo. The total number of employees stood at 169. In 1965, the total number of branches increased to 48, which included new one at Horana, Kekirawa, Padavia, Manna, Emblipitia, Katakastelia, Ragala, and Talavakala, right? In 1981, a branch network was increased to 290, right? Branches, and the famous minor savings scheme was launched. Like Sisudana, no? Right? Like Sisudana, it was a scheme, saving scheme. Sisudana is for children, but they have introduced a new savings scheme in 1981. Through that, they have increased the branches island-wide to 190 in 1981. The first ATM was installed at headquarters branch. The bank was a co-sponsor of the first unit trust established in the country, namely NAML, 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 right? With the continuous effort and dedication of the staff members, in the year 2006, were able to obtain the A rating, right? There are ratings. In 2006, People's Bank got A rating from Fitch Rating Lanka Limited, including progress from its earlier rating level. 2010, the bank branch network was expanded to 679. ATMs increased to 330. People's International Visa debit card was also launched during the year. Fitch rating of AA and RAM rating of AAA was obtained by the bank in 2010. As of 2001 to as of today, right? As of today, not right. As of 2019, right? As of 2019, branch network has expanded up to 735. Now we have People's Bank is having 735 branches, which include 348 branches and 387 service centers. Further, have expanded our customer service via establishing ATMs. So there are 747 ATMs. Cash deposit machines is 262. Bill payment machines 215 island-wide. Now we'll discuss about digitalization. What do you mean by digitalization? Digitalization. Traditional system was analog, right? Analog to digital. The adoption of digital technologies to modify a business model. The aim is to create value from the use of new advanced technologies by exploiting digital network dynamics and the giants to digital flow of information. Now we can observe most of all the corporate activities, business activities, and personal activities. For example, for individuals, earlier we have received so many posts. Now we are receiving and sending money, sending documents through email attachment, SMS, WhatsApp, Telegram, first Facebook, and Messenger. Now, so earlier we have used post, traditional post, to send and receive documents. Now we have digital system. Digital system. We use digital technologies to perform our works, our day-to-day works. That is the adaptation, right? We have adapted. E-learning, no? Zoom. Earlier, you have learned, you have participated lectures traditional classroom. Now you are learning from your home via internet applications. So it's a use of technology. It's called digitalization, the adoption of digital technologies. The method, practice or process of converting, usually analog, converting information into a digital form which is computer readable. Readable. Digitalizing information makes it more feasible to archive, readably access and share. A term that is sometimes also referred to as digitalization, an interrelated concept which refers to the actual conversion of analog data into digital bits of series of 1 seconds and zeros, binary language, one series of 1 and 0 languages. So digital is one, it's deal with 1 and 0, yes or no, right? 1 1 1 0 1 1 1 0 0 0 like that. Then say digital. Analog, it's a different one, right? Analog. So due to the introduction of the binary language into the machine computer system, now everything has become easier. So difference between digitalization and digitalization and digitization. Digitalization, and two separate things. Digitalization and digitization. In define digitalization as the use of digital technologies to change the business model and provide new revenue and value producing opportunities. It is the process of moving to a digital business. Earlier, for example, People's Bank provide the bill payment system in a bank, in the office. Now from our home we can pay bill. So because it's an application of digital technology, right? Use of digital technologies, the same work, but the way of doing the thing is different, right? It is the process of moving to a digital business. The digitization is the process of changing from analog to digital form. Changing analog to digital form, right? Say for example, you have a certificate, your degree certificate. It's a printed form you have taken after your completion of your degree program. So you can convert into digital form. You can scan and keep it in your pen drive or email, and you can send to USA for a job application. So so when you scan the certificate, it's mean it's changing analog traditional form to digital form, right? Digital form. Digitalization is a process of changing from analog to digital form. The process of digitization and process digitalization and digital business transformation. This is the business digitalization concept. Now we'll discuss about how People's Bank transformed from traditional manual system to digitalization. It's not a one day activity. It's a process of development. It's not a single day development. It's not a single activity. It's a process. It's take time, right? So modern development in banking service of People's Bank, for example, right? It took 1961 to 2019. All transaction, so 1961 to 1991, almost how many years? 30 years, almost 30 years. All transactions were completed and recorded manually. And then 1992, People's automated banking system. People's Bank introduced an automated system in 1992. A banking application developed in-house commenced live operation. In 1993, 330 bank branches opening throughout the country. 35 branches, main branches, were fully automated, which enable more efficient customer service. In 2003, the bank signed up with Silver Lake System, Silver Lake System SDV BUD, Malaysia, to install to state-of-art core banking package and trade services solution, which initially is to be operational in 60 selected branches, including head office. So this is the breakthrough innovation held in 2003. And 2008, the bank's remittance service with the introduction of people's people's e-remittance, a web-based remittance product supported by latest technology to remit money from overseas within a minute. Western Bank, think about Western Bank, MoneyGram. So easily we can get money from overseas. In 2011, all branches in the branch network were installed under the core banking system. Now all the banks are interconnected in a single system, core system. In 2011, all branches in the bank network were installed under the core banking system. In 2013, corporate customers were provided with online real-time payment facility for EPF and ETF and customs duty. So the companies, corporation, right? Corporate. They can directly deposit EPF and ETF payment, and also they can pay the custom duties through digital technology. People's Bank became the first bank to be connected to the National Common ATM switch. 2015, bank has taken as an initiative to become a fully digital bank. Bank has taken initiative to identify its customer 360-degree view of total exposure by embark on data warehouse project to combine all its major data sources to derive this value proposition. In 2016, People's Bank proudly launched its self-banking unit with cash deposit machine, ATM, kiosks, right? 2017, opening of Sri Lanka's first fully digitalized branch in Colombo. Received the prestigious ISO IEC 27001 2013 quality certification for information security management. This is the world's highest accreditation for information protection and security and the first for any state bank in the nation. In 2018, further reinforcing the bank's dominance in the digital space, 6 alternative digital channels were launched during 2018 for the benefit and ease of a customer, namely People's Wave, mobile banking app, People's Web Internet Banking Portal, People's Viz Express Banking, People's Win Internet Banking, and mobile app for corporate client, RLOS Retail Loan Origination System, and CLOS Corporate Loan Origination System. So they have developed two applications to get retail loan for the individuals and CLOS corporate loan origination system, right? They can apply via the mobile app. See the product information of People's Bank. Yeah, Isurudana, Sisudana, S account, Vanita Vasana, Jana Jaya, People's Relax Saving Planner, uh, Parintra, investment saving accounts. So these are the product, saving account product, harvest account, current account product, foreign currency account product, PFCA, SFN, DFTA, SFNRA, DFCA, ILA, OIA. So there are a lot of products. You can visit People's Bank website and you can find more information. Foreign currency account, CTRA, DFA, DRA, and you can find digital product, People's Web, People, People's Web, right? And there are a lot, self-banking system. And the next topic is emerging technologies in the banking industry.